Dylan Jovine is hyping up a company that is directly tied to the success of Nvidia. According to Jovine, Nvidia has a hidden royalty program and investors can use this information to make a lot of money. But as usual, Jovine won't tell you any more details unless you buy his super expensive newsletter, costing nearly $1,500. But don't worry, I've got your back. Using the clues Jovine left in his presentation, I figured out which hidden stock he was talking about. And in this video, I'll reveal it for free. I'll also share the pros and cons of investing in this company, so make sure you watch this all the way to the end. Before I reveal the stock, let's walk through Jovine's stock picking history. In September 2021, Jovine told his audience to buy Denali Therapeutics because, apparently, this one company could single-handedly end Alzheimer's disease. Well, that hasn't happened yet, and unfortunately the stock has underperformed since his recommendation. As you can see, Denali Therapeutics has been on a downward trend since Jovine recommended it back in 2021. Then in April 2023, Jovine recommended Editas medicine for its potential to eliminate diseases. He had already recommended Editas in the past, and once again the stock has not performed well. In August 2023, Jovine promoted two military AI stocks. The first, Palantir, has doubled in value and proven to be an excellent pick. But the second stock, C3 AI, has been highly volatile and is currently down overall. In May 2024, Jovine claimed the Pentagon was heavily investing in a small firm, BigBear.ai. Since Jovine's recommendation, the stock has been breaking even, but it's expected to be volatile in the future. I could give you more examples, but I think you get the point. Jovine isn't exactly a stock-picking wizard, and he's given many bad stock picks in the past. But is this time different? Let's find out. In his recent presentation, Jovine starts by saying that investors have a chance to collect a royalty every time Nvidia makes a smart chip. Spoiler alert. Jovine's pitch has nothing to do with Nvidia, and there's no secret Nvidia royalty program. But more on that in a few minutes. The teaser starts off by highlighting an area right outside Washington, D.C. that Jovine claims is the heart of the $85 trillion global economy. Jovine later reveals what's so special about this area. It's called Data Center Alley, and according to Jovine, 70% of global traffic passes right through here, and AI could not exist without this area. This makes sense since data centers are the backbone of modern AI, providing the computational power and storage needed to process and analyze huge datasets. These facilities are packed with servers and networking gear, working non-stop to handle AI's complex tasks and heavy data loads. For example, Google's data centers power its AI-driven search engine and services like Google Photos, where millions of images are analyzed and organized using advanced machine learning. Likewise, Amazon Web Services, or AWS, supports AI for companies around the globe, offering cloud solutions for tasks like natural language processing and predictive analytics. In short, data centers are crucial for AI, making technologies like voice-activated assistants and real-time data analytics possible. Stock pickers like Jovine love recommending data center stocks because they're clearly valuable and will only get more valuable as AI continues to take over the world. But in a twist, Jovine isn't recommending a data center stock in this teaser. Instead, he's recommending an energy stock. Lately, I've noticed that nuclear and other types of energy stocks are gaining a lot of popularity among stock pickers. This is because AI requires an insane amount of energy, so they believe the companies supplying them with power will surely continue to grow. But I think we can all agree that an energy company is not the same as Nvidia having a secret royalty program. Jovine is using very misleading marketing language so he can sell more newsletters. Basically, all he's trying to say is that the bigger AI gets, the more Nvidia chips will be needed, which in turn will increase energy demands and turn into even more business for a certain energy company. But which energy company is he talking about? Let's go over the clues Dylan left in the presentation so we can figure it out. The first clue is that the company controls more than 750 million barrels of oil a day and 2.2 million barrels of natural gas liquids. Jovine also mentions that the company offers an extremely high dividend, meaning it's an energy MLP. The next clue is that the company acts as a toll booth for oil that passes through, implying it's an oil pipeline company. And finally, we're told that the company's top executives make up to $92 million in salary per quarter. So which company is Jovine talking about? I'm about to tell you the name of the company in 10 seconds, but first, I have a free gift to help you in the stock market. Click the link in the description, and I'll send you an issue of the only stock-picking newsletter that I use and recommend. I'm literally giving it away for free, so just click the link in the description and I'll send it right away. Jovine is teasing a company called Energy Transfer LP. Here's some background information about the company along with some pros and cons of investing in it. Energy Transfer LP is a major American energy company headquartered in Dallas, Texas, founded in 1995. Energy Transfer operates a vast network of pipeline systems that transport natural gas, crude oil, natural gas liquids, and refined products across the United States. The company also engages in natural gas processing, storage, and marketing. Energy Transfer's extensive infrastructure and strategic acquisitions have positioned it as one of the largest and most diversified midstream energy companies in North America. Now let's look at the top 3 pros of investing in this company. The first major pro of investing in ET is its strong financial performance. In the most recent fiscal year, the company reported revenue of $81.4 billion, reflecting its ability to maintain steady cash flows despite the volatility in energy markets. In the first quarter of 2024, Energy Transfer generated $21.7 billion in revenue, with a net income of $1.24 billion and earnings before interest, taxes, depreciation, and amortization of $3.4 billion, highlighting its strong cash flow generation capability. Another pro is the company's extensive and strategically located pipeline network, which ensures a steady and reliable revenue stream from transporting natural gas, crude oil, and NGLs. Energy Transfer benefits from long-term contracts with stable, creditworthy customers, which provide predictable cash flows and reduce risk from volatile commodity prices. Despite having great infrastructure already in place, Energy Transfer hasn't lost steam, and they're still going hard. The company is actively pursuing strategic growth initiatives, such as the recent completion of the Permian Bridge project, which increased crude oil transportation capacity from the Permian Basin. And last, but certainly not least, if you're a dividend investor, there's more good news. Energy Transfer offers a strong dividend yield of approximately 8% as of August 2024, significantly higher than the average yield in the energy sector, demonstrating its commitment to returning value to shareholders. With all this being said, Energy Transfer does present some major cons that you should be aware of before you invest in their stock. First of all, the company has high debt levels totaling around $48 billion, which increases financial risk. High debt levels mean significant interest payments, which constrain cash flows during economic downturns or periods of low commodity prices. Another con is that operating in a highly regulated industry, Energy Transfer faces risks related to environmental and safety regulations. Changes in regulations or non-compliance could result in costly fines, operational shutdowns, or mandatory upgrades. Lastly, the company's revenue is impacted by the volatility of commodity prices, particularly oil and natural gas. Significant price fluctuations can affect demand for the company's services and revenue stability, so you need to watch out for this if you invest in the company. Now, if you're sick of these hyped-up stock recommendations from annoying salesmen like Dylan Jovine, I have good news. Get ready for a breath of fresh air. I recently started using an amazing stock-picking service called the Insider Newsletter, and I'm in love. The team behind the Insider Newsletter doesn't focus on marketing, which is why you've likely never heard of them. And that's a good thing. The Insider Newsletter is my favorite stock-picking service because instead of pumping out exaggerated stock teasers and advertisements, the team dedicates almost all their energy to good old-fashioned stock market research. So it's no surprise that the Insider Newsletter has been absolutely crushing the market since starting its service a few years ago. I love how the researchers behind the Insider Newsletter only share valuable stocks that most investors have never even heard of. This gives their subscribers an advantage since they can jump on these investment opportunities for a very low price before everyone else. For example, they recommended buying shares of Lynas Rare Earth Limited in June 2017, when it was selling for about $1 Australian. As of July 2024, the stock is worth over $6.11. This means investors who took their advice back in 2017 earned over 517% in profit. More recently, in March 2022, they recommended an oil services company called Tidewater, which has grown from about $20 to over $87 as of July 2024. So if you took their advice, you would have made over 300% profit in just 2 years. I want you to experience their newsletter for yourself, so I have something special for you. Click the link in the description, and I'll send you one of their past newsletters with 5 stock picks for free. I'm literally giving it away for free, so click the link in the description and check it out.